Good morning, everybody. Welcome to FOMC Day. It is here, and yes, while history does not repeat itself, it sometimes rhymes. We are going to do our best to try and replicate what took place there on December 18th at the FOMC meeting back last year. Impeccable, undestroyable, cannot be broken, but we're going to go for it. Anyway, quickly, I will run over with you. It is earnings season. It is the biggest week of earnings. And as you have already had, United Health, SoFi, PayPal, Boeing, UPS, Spotify, all report. Visa, Starbucks, which we talked about in the chat room after the market closed yesterday. We don't have anything that's reporting today prior to the opening bell. But after the market closes, I want you to just recall this because it will lead into what we're discussing here. Meta, Microsoft, great job on that, Robinhood Gilly. And then on Thursday, we have Apple, Amazon, and this MSTR should be down at 250. And that's being generous. Coinbase should be down at 300, and that's being generous. But it is what it is. So anyway, a recap of yesterday. My artwork is not fantastic. I'm not an artist. The July 30th SPX 6390 puts 180%. The July 30th 6335 puts, that's July 30th today, that I gave out to you yesterday, 279%. And the July 30th SPX 6285 puts, 336%. As we went into the week, giving you out the 5 green weeks, FOMC week, discussing everything about it, went into yesterday with the same because we got the red close there on Monday, but we got the green close, but below 63.90, so the spread worked. You had your yesterday watch, and that was where, again, we started discussing, well, here you go, the 63.95, 63.90 calls. Again, same thing, 350. Some of you got $4, some of you got $3.50, some of you got $3. It ended full credit because 7 green closes in a row. You got your red close yesterday. But this is where, the highlight in the email that we talked about with the, history doesn't repeat itself, but it sometimes rhymes, looking over at what took place over there in December. But I'm pushing you down here to the bottom of the email because of yesterday. In the email, which is prior to the sunrise, you had your, hey, Wednesday, July 30th, SPX 6390 puts, very, very cheap, all because of the VIX, and you got paid on it. So, again, you have your FOMC day prep. It's been emailed out to you on Monday. You can go through it as much as you want, but you need to basically be ready at around 1 o'clock this afternoon, and then we'll start getting a little bit aggressive as to what it is that we're looking at in the room as far as calls, puts, prices, everything else, which, again, I'll go over with you. But, again, not to say again too many times, it is FOMC day. And this is the best advice you're going to get for it. Because trades like this don't come around just on a regular random basis. $75 per contract, $12,490 per contract at the end of the day.
Our biggest problem is we have so much growth that the Fed won't cut.
What the fuck? Oh, Jesus Christ. Oh, my God.
I'm so sorry. I'm so sorry.
So I bring you on to SPX because of the red close. But I want to highlight for you here, year over year, so meaning today from 12 months ago, we are now above greater than 20% from a year ago. So again, you're trading an algorithm. You need to be very, very well aware of that. Trading an algorithm, we're only up 3% on the month. We're up almost 8% on the year, 7.92%. You need to be very well aware of that, as we have been gapping up every single day, and we're gapping up right now, since July 18th. Actually, you could say we have been gapping up every single day since July 14th. We're going on 2.5 weeks of gap ups. Your tiny range, tells you everything that you need to know. So where I want to bring you on to, and I will go back and reference onto the email in a minute because it's been mentioned for a little bit more than a week. Today will be 65 trading sessions. Assuming that it does, that the SPX is closed above the 20-day moving average. So that's very significant. Today is also 24 trading sessions since we have had a plus 1% day. And that's the part that I want to go over with you that I will need to find over here in the email, and I know that it is going to be right there. Prior to Trump winning in November 4th, the SPX went 18 trading sessions, and it all came the day after the October 31 dump. October 31, S&P dropped 108 points, closed down 108 points, down 2%, dropped down a little bit greater than that. Don't recall why. I'll need to go back on my notes. But you were down almost 2% on the S&P. The NASDAQ, which we're going to refer to in a second here, was down almost 3% on that day. The day after, boom, you got your plus 1% trading session.
It will be not a game changer, because that's not a nice enough term. It will be wonderful. It'll be so beautiful. It'll be a gift from heaven if it works.
After Trump won, the SPX went 29 trading sessions without a plus 1% day. And when did the plus 1% day come? It came the day after the December 18th FOMC dump, where the SPX 6,000 puts made an epic display.
I'm not leaving. I'm not fucking leaving! The show goes on!
On December 18th, the S&P dropped almost 3%, 2.95%. The NASDAQ minus 3.56%. So that's where we bring into our reference here. Minus 1% for today is 63.07. So you need to be very well aware of that. Minus 1% over there on the SPY is at 628.91. Let me make sure I got that right. Give me a second here. Yep. On your QQQ, which is what we're going to be looking at here, you have 16 trading sessions without a minus 1% move. I haven't counted the plus one. Okay, so there you go. 17 trading sessions since we had a plus 1% move, which was the day before July 4th. July 3, we had a plus 1.16% day. So you have 16 trading sessions without a minus 1% move on the QQQ. Minus 1% for today is at 561. So quite obviously, the 561 or even the 560 puts are going to be of very clear significance, and you need to be very well aware that going back since July 18th, visits below 560 have occurred, and they have not lasted more than a fraction of a few seconds. So you need to be very, very well aware of that. April 30th was the last minus 2% trading session on the SPX. So again, be very, very well aware of what your pivots are. Minus 1% is 561.59. Minus 2% is 555.91. Over on the IWM, it's an absolute fucking joke. Complete joke. We are down 0.11%, basically flat on the year, while you have the QQQ up 10.3%, and you have the SPX, as we showed there, plus 7.92%. It's a complete joke. So, again, bring you back on to, here we go, with the charts. 62.85s, there you go. A little bit better than 300% on those. 63.35s, which is where your real meat and potatoes is, that was your trade. And as of right now, they're trading at $4. The 63.90s, well, that's for the people that have a little bit of intelligence to know how to ride in the money. And I already got a couple of messages of people that took very good advantage of that yesterday and are going to be riding free puts into today. We're looking at the VIX, and that 1622 is extremely significant. So in any way, shape, or form for puts to be working out today, you're expecting to see that VIX break up above 1622. Now, let's go on the contrary. But before we do that, let's count to 10.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Muy bien.
Okay, now that everybody's taken a little bit of a break, a little bit of a breather, for calls, which, again, I am not against. Buying calls and then seeing the VIX, because you're only working with a 2-hour window at the end of the day, seeing the VIX get dumped 15, 1542, 15, 1451. Your premium over there on your calls is going to be dropping as well. So your price on calls, price action on the SPX, QQQ, whatever it is, needs to be exponentially significant to the upside for those calls to be able to work out. And you're going to have to time it just about as good as dropping a bar of soap in the prison shower. So be very, very understandable about what you're up against with the calls. So I leave you here with the SPX, but we've been looking at zoomed in. We filled one gap. We have not filled this little tiny gap, which goes down to 63.60. And as you very well know, we have not been able to get down into the 63.60s very significantly for the better part of July 24th. So call it a week. Since the EU deal rumor, which von der Leyen really, really fucking gave it to Trump, 63.35 is untested. Your minus 1% level is down here at 63.07. And your 20-day moving average will be moving up, coincidentally, right up to around that 63.07. Your 62.85, that's going to be your bull test like you saw back there on July 22. So moving you out of that onto the IWM, ping pong, 227, short the shit out of it, above 226. And you need to see 221 get broken because, again, you had your nice little minus 4% drop back here on July 16th, but you haven't been able to get down into the minus 220 zone. So you got to have a lot of respect for that 221.41 if you're going to be playing the IWM. Over here on DIA, looks like shit. Apple should never have done that JP Morgan deal with the Apple Card prior to earnings. Apple really took a hit yesterday, as well as a lot of other names like Boeing. Little bit of a gap here that's still unfilled going back over here to July 22nd. So again, that puts pressure on that 63.35 over on the SPX. But it all comes down to the QQQ because everything is inside QQQ. So 560, a lot of respect has to be given to 560. Your Fibonacci's that were very strong and very long lasting with your plus 40% above the bounce right over here at 563. So I wouldn't go shopping too deep if I was looking at the end of the day prior to the FOMC for any kind of QQQ puts down in the low 560s. I would stay here in this 563, 565 region if I was going to be looking at QQQ puts, which, as you very well know, they are going to cost you a day trade. So be very well aware of that for those of you with smaller trades, accounts, apologize. So that's where we're at. It's FOMC day. It's FOMC day. You get 8 of these every year. This is where you take that tiny little bit of risk that you're already well prepared to get managed, and you go out there and you swing like Bryce Harper and you let it rip, because trades like that, they happen 2,000%, 3,000%. I've been well known for those kind of trades for the decade I've been doing this. But 16,000% on under $100? Smile, boy. It's sunrise.
If you fart, they will forget in a day, but if you shit yourself, they will remember for a lifetime. You got to make big plays to be a big player.